thank you everyone for this wonderful day today. This is the last panel, and it's one that's very close to my heart. I've got a disclaimer to make, which is to say that I am a shareholder in every one of these companies represented here, and I think for good reason. But today we're talking about Bitcoin as a treasury asset, and we're going to explore the various different approaches that all of these leaders have in how they approach Bitcoin as a treasury asset. There's like the maxis, there's the double maxis, there's the triple maxis. Whether that involves just turning cash reserves into Bitcoin or doing more sophisticated things with debt and on the liability side, or having an operating business that's Bitcoin native, mining, and whether or not that business can be compatible with a long-term Bitcoin strategy and what that strategy might look like. So we're going to explore all of these different facets of Bitcoin as a treasury asset. But before we do, maybe everyone can take a moment to introduce yourselves and talk a little bit about your company.
Sure. Thank you, everyone. My name is Andrew Kang. I'm the CFO of MicroStrategy. As many of you may know, we are a business intelligence software operating company that launched a Bitcoin treasury strategy in August of 2020. Since then, we have raised capital through equity as well as debt. We've also used excess cash flows from our business to acquire more Bitcoin. We are predominantly a buy and hold for the long-term hodl strategy on Bitcoin. We now hold 252,220 Bitcoin on our balance sheet for an approximate value of about $15 billion.
Hi, everybody. This is Salman Khan. I'm Chief Financial Officer for Mara Digital Holdings, formerly known as Marathon Digital Holdings. Still trying to get used to that name change. And my background and experiences from oil and gas industry and technology in the past. Spent about 15 years in very large and very small companies over a period of time. And Mara is a global digital asset company. We are in 4 continents and 13 data centers worldwide. And we are the largest Bitcoin miner today, and we continue to expand. We tripled ourselves last year, and we are expecting to double ourselves this year. And we have full technology stack, which means we have technology firmware pool that we operate for our own mining pool, which means that we mine the Bitcoin utilizing the mining pool that we operate ourselves, which we believe is a competitive advantage. We also have layer 2 technology and other things in the pipeline. In addition to that, we are looking at innovative ways of utilizing Bitcoin mining to heat cities, for example. We have a project in Finland where we are actually heating homes, 11,000 homes, and reducing our costs, utilizing complete renewable energy to create this heat that used to be fossil fuel in the past. So very excited about different things, lots of things going on, and excited to be here again this year.
Hi, Patrick Fleury, CFO of Terawulf. Been CFO for about 2 years. Prior to that, I was for about 20 years institutional investor, similar to Salman, also focused on energy, power, commodities. So Terawulf is a energy power infrastructure company that mines Bitcoin currently at 2 sites. I think we're the only Bitcoin miner that I know of that is behind the meter at one of the nation's largest nuclear facilities. And then our other site in upstate New York is 35 miles east of Niagara Falls. So we mine with predominantly zero carbon sources. And then we are also diversifying significantly into high power compute and AI, where we will host clients of ours that are AI companies, hyperscaler companies, and by building out all of the infrastructure for them, and they will bring their GPUs and their customers, and we'll provide the power. We are a little bit different, I think, than most folks appear in that we are very big supporters of Bitcoin, and we maintain that network, and we mine today approximately 6 Bitcoin every single day. And I can tell you today, I'm mining it at 40,000, fully loaded, every cost in the company. But we also monetize what we mine every day. And that's because our view is, like any commodity companies you would invest in the world, we can mine Bitcoin cheaper than what you see it on the screen. So we're mining at 40,000, and then we turn around and sell it. And then we take those proceeds and reinvest in either growth or dividends or share buybacks or paying down debt, which we're now debt-free, but we did have debt for a while. So that is, I think, a bit of a different approach than most of the other folks up here on the panel.
Hi, Renae Cormier. I'm with Semler Scientific. We are a medical technology company. We've been around for 10 plus years. We found ourselves in the position of, we're profitable, we have a lot of cash flow, had accumulated a lot of cash on our balance sheet. And this last May, we announced that we were adopting Bitcoin as our primary treasury strategy, very inspired by Michael and Andrew in MicroStrategy. At this point, we have been using the cash on our balance sheet and operating cash flow to buy Bitcoin. We're babies compared to MicroStrategy. We have a little over 1,000 Bitcoin on our balance sheet at this point. But looking forward to growing that.
Excellent, thank you. So we've got a diversity of opinion here, all right? We've got the pioneers in the space who are, have been promoting Bitcoin for corporations and as a treasury strategy, but also I think a very interesting discussion to be had around, the compatibility of a mining business and a Bitcoin strategy. But let's start with you, Andrew. Could you walk us through MicroStrategy's macro strategy on how you've started, with maybe the cash reserves, but now moving into these sophisticated debt instruments?
Sure. So MicroStrategy is the story is not too different from Semler. It just goes back to 2020. Really, that year was challenging for a lot of different reasons, and for the company at the time, we had a very conservative balance sheet, no debt. We had about $500 million of cash that was just sort of retained earnings over the years. And what began to happen in the spring and throughout the rest of the year really was a catalyst for the board and the senior management to really try and understand how to protect the store of value that the company had generated, which was sitting in cash and short-term cash equivalents. I like to say that many of the management team, including Michael, went into a closet with this problem and locked themselves in there, and didn't let anyone come out until there was a solution to how to again protect the store of value that the company had created over the past 30 years. And really, being a technology company, been in business for over 30 years, providing business intelligence and data analytics to some of the largest companies throughout the world, it was very technology adjacent. And the mindset of the board and the management team at the time was really also very adjacent to finance and financial engineering concepts. And so those two things kind of came together in 2020 when Michael came out of the closet with the Bitcoin standard as the strategy that MicroStrategy would deploy to convert our cash into Bitcoin. So really, that was the onset. We took that $500 million. We actually very transparently, as a public company, went out to our investors and we said, hey, we're going to do this. We're going to buy Bitcoin. We believe in Bitcoin as a technology. We believe in Bitcoin as a store of value. So we reserved about half of that $500 million to do a Dutch tender auction to our investors. And we basically said, if you're not on board, we'll give you your money back plus 15%. And you can go on your way and we'll go on our way. We wanted alignment with our shareholders and with our board and with our management. What was interesting is only about 60 million of that 250 million actually tendered. So people were already thinking about what the value could be. And we used the remaining cash and bought our first Bitcoin. Ever since then, to your point, we've raised equity capital through ongoing at-the-market offerings. We've also raised different types of debt. including secured debt against our Bitcoin, which we've extinguished. We raised senior secured debt, and most recently we've been executing on a convertible debt strategy. And so all of that has really enabled us to accelerate the flywheel of not only converting our operational excess cash to Bitcoin, but using the capital markets to really transform what we think Bitcoin as a store of value has also become for us a store of digital capital. And so that's really been the way we've been able to grow from 2020 to today. And if you look at our stock performance, and I know many of you follow probably Michael on Twitter, you can see over the last 4 years, our share price has increased over 1,000%. And the closest person to us over that same 4-year period in the S&P 500 is NVIDIA at about 900%. So while our software business has continued to be cash flow positive, still generates about $500 million of revenue annually, it's really that Bitcoin strategy, that digital capital strategy that has been enabled us to grow our market cap from somewhere between $1.5 billion to $2 billion to today, right around $35 billion.
Amazing. Renae, maybe you can speak to your journey because you considered quite a few options and you ended up going down the Bitcoin standard as well. Could you please share something about what were the different options that you considered and on which of those criteria did Bitcoin seem like the clear winner?
Sure. So we had come to a point where we had over $60 million on our balance sheet. We were holding it primarily in short-term T-bills. And so when you're looking at inflation and taxes, one could argue that we were actually destroying value for our shareholders. We had spent a lot of time looking at various options, including acquisitions or different partnerships. Never got to a point where we found any companies that we thought would be a good partner for us to merge with. We're fortunate and I think unique in a public company board in that our board members and senior management own over 30% of the beneficial shares of our stock outstanding. Our chairman of the board, Eric Semler, he's an early investor in us. His dad founded our company, but he is an investor, his background. So he ran one of the largest TMT hedge funds in the world, TCS Capital, before he took it into his own private family office in 2017, 2018 time period. He has been an early investor in Bitcoin himself. And so he was very familiar with it as an investment tool and an investment asset. The other members of our board are also investors and sophisticated business people. And so when Eric brought it to the board and the management team, it wasn't so much of a leap for them to be able to see the value in that. And looking over the long term, we really do believe in Bitcoin and the value of it, that it will go up and our shareholders will see the value in that.
Amazing. So today we've talked a lot about reporting standards, and we had the FASB here as well, and we talked about fair value reporting. As a company that's recently adopted the Bitcoin standard, could you talk us through, as a CFO, what were the things that you had to think about when you went into this Bitcoin strategy, and especially with regards to, say, SEC reporting, or what were the sort of nuances that weren't familiar to you as a company that wasn't previously holding digital assets?
Yeah, sure. Well, first of all, we had to get all the infrastructure in place. So a lot of due diligence on who are we going to trade with and custody with. I think with the new standards that the FASB came out with, it actually helped us because now we have something that's clear, right? And we didn't have any legacy assets on our books that we were accounting for an intangible. So we did early adopt. Again, we're new in May, so we could, in our June reporting, we could adopt that. The SEC it gave us comfort that the SEC did approve all these ETFs this year and that they are moving towards more regulation. That being said, we did file an S3, a shelf registration, and it was quite a process with the SEC. Most of their comments were around Bitcoin and custody and disclosures around that, so that was quite a process.
And what were the kind of questions, that someone should expect from the SEC around these disclosures? If you could share some light on some detail here.
Well, you can probably look up all the correspondence letters at this point, but with the back and forth, it was a lot on what the processes were and the custody, right, and the security, cybersecurity, and how we internally as well were making sure that these assets were secure for our shareholders, right, and to make sure that our shareholders knew how our processes worked and how we were, obviously the accounting for it, but the risks, to make sure the risks were out there as well.
Okay, excellent. Andrew, you mentioned earlier that debt has become an important part of the liability side of MicroStrategy's strategy. And Salman, this is something that you've also recently done. Could you share a bit about the hodl strategy, but also this debt strategy that is now part of Mara's treasury strategy?
Sure, happy to do that. I want to circle back a little bit to the background first. One is the Bitcoin is an asset class, as Andrew mentioned. It's a store of value, and the kind of rate of returns that Bitcoin we have seen with Bitcoin returning, you don't see that kind of rate of returns with other classes as of today. And imagine Apple has $150+ billion in cash. If Apple's CFO were to think like Renae was thinking and invested a portion of their treasury into Bitcoin, what kind of rate of return they would have seen and how many billions of dollars more would have been added to their balance sheet, right? So that's a question that comes to my mind. The other thing is that this is becoming a national security interest issue, because you have blockchain, Bitcoin, block space, presidential candidates in the U.S. Going out and talking about treasury asset, reserve asset as in Bitcoin, just like U.S. government holds gold, the same way the U.S. government should hold Bitcoin, just like they hold in crude oil. Strategic reserve assets, why not here? Because you've got similar situations. You've got sovereigns overseas internationally who are going in this direction and holding Bitcoin on their balance sheets. So the question is, when you have an asset class, a store of value that has given such an amazing rate of return historically, the question always comes back to, should you keep that in cash and get 4 or 5% treasury returns, just like Renae was mentioning? Or should you reinvest in your business? And the business that we operate in, we take pride in being the largest Bitcoin miner, and we continue to grow internationally and domestically. But then the question arises, it's a capital allocation question and treasury question. Should I allocate this money into Bitcoin mining today, or does it make sense to invest in Bitcoin from the market? So let me break that down a little bit. And I'm derailing from your question because this answers the question in the end. You can go out and I can go out and build a site 12 to 18 months, put the Bitcoin miners together, invest money into it. It will take 5 years, 7 years, whatever the life of the asset is, to produce Bitcoin. And rate of returns are amazing. They look great. There's a reason why Warren Buffett says invest in gold mining companies instead of gold, right? There's a reason for that. There's a return arbitrage, if you like. But having said that, in the current price environment where we are today, there's opportunity to invest in Bitcoin directly, because you can take the Bitcoin, buy it in big chunks today by raising capital that Andrew mentioned and MicroStrategy has done it very well, sort of pioneer in this space. And you can take that low cost of debt, and it's convertible. Ultimately, it converts into equity, but years later. And now you can take that without diluting your stockholders and lever that up on your balance sheet with an asset that is highly accretive. So you have to be a believer that this is a highly accretive asset. That's the first premise. Secondly, the rate of returns from our stockholders' perspective, you could take that dollar and invest in mining, and in today's hash price environment that we are in, hash price is the global hash rate and the Bitcoin price, a combination of that, which essentially shows you what is the rate of return that you will get. And in this price environment, it didn't make sense for us to invest more beyond what we had already invested in Bitcoin mining. And thereby, we went out and did a convertible debt transaction a few weeks ago and bought 350 million plus Bitcoin. We are the second largest hodler after MicroStrategy in public company space, although by far. We just completed our marathon times 1,000, if you like, 26,200 Bitcoin. As of today, we have around 27,000 Bitcoin. And we continue to accumulate that either through mining or through acquisitions. And it all depends on what market conditions exist, where the price appreciation is expected to be for Bitcoin, and the underlying situation for our company as to where we stand from our growth perspective.
Amazing. So it sounds like there are a few different positions represented. There's a medical technology company that has treasury reserves and they want to deploy that into Bitcoin. There's MicroStrategy pioneering a business intelligence software company that's got large treasuries deploying that in Bitcoin. The underlying businesses are not Bitcoin native. With mining, there is this added nuance that the underlying business is Bitcoin native. And I think, Patrick, you represent a different point of view, which I think is interesting and important for this debate. You don't have a Bitcoin hodl strategy, and miners are naturally seen as natural sellers of Bitcoin. How do you approach Bitcoin as a treasury asset?
Yeah, unpopularly with this crowd, maybe, but no. In all seriousness, look, I think we, similar to Mara, view ourselves as contributing to this community and to this network, right? I mean, we have 10 exahash online, 2 different sites today. We're one of the lowest marginal cost producers, and so I think the different approach we take is perhaps a bit more from our company's background, which is in energy power commodities. The company, and specifically my background as an institutional investor, but our management team has been running private power assets for over 30 years. And so we came at Bitcoin as a way to monetize stranded power and largely zero carbon cheap power and convert those electrons into a global commodity. So I think again the view that we have is, and I know it's very different from most of the other panelists here, is similar to what Salman said with Warren Buffett and mining companies. Our view is you buy our stock because we can mine Bitcoin cheaper than where you can buy it on the screens. And then we can monetize it right away and return that spread to you in the form of either organic growth, inorganic growth, dividends, buybacks. And so our view is, again, not to my job is to get our cost as low as possible so we can make the biggest spread possible. And not to necessarily take a view on where Bitcoin is going to be, because remember, and I get asked this a lot at different conferences and panels. Where do you think Bitcoin's price is going to be? My answer is higher, but I don't know. Other than that, right? I think it'll be higher because we all know it's a very scarce asset, but I don't know where it's going to be today, tomorrow, the next day. And so again, my focus is get my cost as low as possible, maximize the spread I'm earning, and then if the asset does what we all think it will do in the long term, I'm positioned to make a lot of money. The tough part about Bitcoin mining, right, is Bitcoin can go to the moon, but network hash rate will follow, and will follow quickly. And we've all seen that in multiple different cycles now. And so what that means is you either have good power, which is what determines where you are in the marginal cost curve of Bitcoin mining, meaning you have low price power, or you don't. It's just that simple. And so if you have low priced power, you are going to make money, no matter where network hash rate is and Bitcoin price is. If you don't have low price power, I think what will happen is Bitcoin will go up, but network hash rate will follow very quickly. And as we've all seen with Bitcoin mining does adhere to Moore's law in that every year or two, right, we double in efficiency. Now, I think we're getting near the sort of peak of that, but still, that's what's happening. And so miners are getting more and more efficient. Network hash rate is continually increasing. So again, our approach, I think, is a bit more of a, I want to say, TradFi approach to how we sort of monetize the asset, but we're huge believers in Bitcoin. And I think, as Renae said, I mean, I'm looking at a few members of our team are here today too, but we had a very long, I mean, over 6 months back and forth with the SEC. I know Mara did as well. And while they can be difficult, they were actually very responsive and helpful. And we sort of walked them through some differences of opinion. And actually, I think, I won't go as far to say change their opinion, but they did accommodate some of the things after we explained our position on them.
They share an example on that, or like something where?
Yeah, sure.
Because it's great to hear and be optimistic about regulators understanding our industry. So it would be amazing if you could share.
Yeah, sure. The sticking point we had with them, which it was funny because Gary at CleanSpark had the same issue, and after he saw our financials, he ended up doing the same thing for us. But the sticking point we had is if you look in our MD&A section, we have a table that shows you the cost to mine a Bitcoin, right? And that what the SEC demands for disclosure there is a little different than how I think about it. So when I tell you our cost is $40,000 to mine a Bitcoin, we have 3 costs in the company. It's power, SG&A, and then site level operating expenses. That's it. So super simple, easy business. The SEC wanted us to include additionally in that table depreciation. So my perspective on that was, well, yeah, fine. We depreciate our miners over 4 years, but that's not necessarily gospel. And what I mean by that is there's physical obsolescence to a miner, and there's also economic obsolescence, right? So if you break those two things down, the physical, right, depends on where you're located. Are you doing immersion cooling? Are you in the Northeast? Are you in Texas? Like, what are the actual? Because stating the obvious, if you're doing immersion cooling or if you're in a very hostile operating environment, the miner's probably going to have a lower average life, right? And then, if from the economic obsolescence side, if you have low-priced power, you have a better chance of making it through a halving or two with your miner, right? So just because we're depreciating those miners over 4 years doesn't mean that in 4 years they're garbage and not running. And so the discussion we had back and forth with the SEC was, I said, I've been an investor in power companies, for example, for over 20 years. Every single nuke, right, was originally depreciated over a 30 or 40-year life because that's what the operating license was with the NRC. They're all still running. So just because you're depreciating it over 30, 40 years, again, doesn't mean that that's the actual life of the asset. And so my response to them was just because we do it over 4 years, that doesn't mean that it's not going to run longer. And I don't think that it's not a cash cost. It's a cost of doing business and getting into business, just like it is in oil and gas or power or other, but that is not a marginal cost of mining. And so they accepted that, instead of putting depreciation in the table, we put a footnote in. But that was, I think, a great example of explaining to them our perspective and them responding in, I think, a more favorable way and working together with us.
Yeah, that's encouraging to see. Maybe coming back to Andrew, you've got the Bitcoin for Corporations initiative. Could you share, from your point of view, what kind of corporations do you think should consider a Bitcoin strategy? And as a CFO of that business, what should they be looking out for, and who are the stakeholders they should include? And how can they, if there are sort of people who are interested in Bitcoin in these businesses, what are the things that they have to do in order to move forward and do that with confidence within their company?
So before I answer the question, as I was listening to Patrick, what I reflect on is, first of all, we're all here supporting Bitcoin as an asset class, and I also reflect that different companies and individuals might have different strategies, right? MicroStrategy and some of the others here are long-term believers in the value growth of Bitcoin. Not that you're not, but we talk about how there's maxis and there's traders, there's more TradFi adjacent, sort of strategies. For us, we believe that if we hold on to Bitcoin, it'll impact our shareholders with far more value for our business, which could be different from others, in a way that will be the most accretive. And someone mentioned it before, we do it through debt and equity. And in fact, the debt is not dilutive, it's somewhat anti-dilutive, because we're able to leverage the flywheel of a convertible debt offering to actually buy more Bitcoin at a premium. So we're building all of that sort of acceleration of growing the store of value. But we talk about why our convertible debt offering also has become so successful is because of the volatility in our stock. So again, everyone has a view, and one person's view could be long-term, one person's view could be different. But I think what's great about Bitcoin is it has enough capacity to hold all of those views in an ecosystem that everyone believes in the value of Bitcoin as a commodity, as a store of value. So that was just my reflection on what you were saying. But Hemant, to your question, I think corporations can come from many different profiles. Ours, as I described before, was not too different than Semler's. We had a profitable cash flowing business. We were looking to deploy that capital into something that was more valuable than just sitting in cash. Salman gave a great example. If Berkshire or Apple put a small portion of their treasury into Bitcoin, you don't have to go full hodl, but just put a portion of those hundreds of billions of dollars, it would benefit their shareholders. So I do think there's a different, just like if you have a different strategy on Bitcoin, I think corporations can have different strategies on Bitcoin. But for MicroStrategy, it was the most accretive because we had a profitable business that has been in business for a long time. We were very stable, growing slightly, and we had a lot of capital to put to use.
Yeah, it's especially from a regulatory point of view, Bitcoin does seem to be in an asset class of its own. Having that in mind, that Bitcoin does have this regulatory clarity. Maybe Renae, from your point of view, you mentioned that the ETFs coming in gave you a lot of confidence. If there was a CFO from a company that is not involved in Bitcoin at all, what advice would you give them to in their sort of journey to understanding Bitcoin and adopting it as a treasury asset, especially if they're worried about the sort of, Bitcoin, will the regulators come after me? Do you feel like it's a very viable path now that there are several companies that are holding it as a treasury asset?
I think it's becoming more so, and it's becoming more and more institutionalized. You can go on MicroStrategy's website and get all of the playbooks right there. But I think you also, again, going back to if you think over the long term that this is a good store of value, and we're only doing Bitcoin, so it's it's proven it's a finite asset, liquid gold. The one thing too I would caution is that you do have to be able to sit with the volatility, and having that long-term view is key, I think, in being able to stick with it. Also having a lot of experience on the investment side. I was in the hedge fund industry for 20 years before I came to Semler. Having Eric on our board, we've both dealt with a lot of drawdowns and volatility, and to have the framework of it being long-term and you're able to actually flip that into an opportunity and to take advantage of the volatility to add to your holdings as opposed to saying, oh my God, we're going to have to mark this to market. Now we're going to have this huge loss on our income statement. It's just reframing it and knowing like it's not cash. It is just mark to market, but embracing the volatility.
For sure. And Andrew, to what you said, the volatility becomes a feature, not a bug, especially when you go into a convertible debt strategy. Salman, this is something that you've embarked on recently. Could you share a bit about how the volatility enables, how it becomes a feature and how it allows you to, borrow and raise capital at very low interest rates?
Yeah, the investors love this because when we did our convertible transaction, we on purpose went on a smaller scale, not a large scale, and it was oversubscribed significantly by significant numbers. And that shows the level of interest from investors in this space who like to invest in a balance sheet like this and have that convertible feature. What that allows them to do also is to put their positions, the short position, although it looks ugly on the short position of the company, but it's actually good from the investor standpoint because they're going out and putting these call options and making money out of that, right? And not only that, but also benefiting from the accretive nature of the investment that they've made in the company, right? So on multiple fronts, and again, when you think about debt, you wanna think about balance sheet management as well, right? And coming from commodity cycle industry, oil and gas, you see a lot of very successful companies, and then you hear about very unsuccessful companies because in a commodity cycle, oil price does this, and Bitcoin price is oil price on steroids, as I would call it. So how do you manage that? In this case, if you put debt on the balance sheet and keep investing in a depreciating asset, you can get in trouble ultimately. So how do you do that? You only go for debt or convertible note where you can put an asset on the balance sheet that will be accretive. And that's where the strength of the balance sheet comes into play, right? Last year, we reduced our debt. We had convertible debt from 2020, 2021 timeframe, and we reduced it by 50%, for example. It was purely balance sheet management for us. We strengthened our balance sheet, but then we went out and added more debt this year and bought Bitcoin immediately thereafter. And we believe that's going to create value for us from a long-term perspective. Having said that, this was not the first time we did it. We did it back in 2021. We went out and bought 150 million worth of Bitcoin in the open market, and we've never sold that Bitcoin. It's sitting on our balance sheet, and you do the math yourself. Rate of returns have been amazing. I wish I could go back and buy more Bitcoin in the prior years because the Bitcoin price has continued to accrete. And that is the unique nature of the value proposition that Bitcoin provides to investors. And if you are a company who are on the edge of buying Bitcoin or considering this strategy, few of the things to consider is if you had invested this money years ago into Bitcoin, how much cash would you have today, or Bitcoin and cash combined together? And that will help answer your questions.
Maybe to represent Patrick's point, and I'll let you do that in a second yourself, but is the hodl strategy, well, I mean, for listening to Mr. Michael Saylor, it's clear that MicroStrategy will never sell Bitcoin. But for a miner, given that the prices do this, and you have to chase the hash rate, there seems like in this business model, it could put pressure on your ability to hodl for longer periods of time. Is the hodl more of like not a short-term sort of trade, but sort of a cycle trade sort of element, or is this like a forever hodl strategy?
Yeah, so $1.8 billion worth of Bitcoin on the balance sheet with this strategy while being a miner over the last few years, and still the largest miner in the world, publicly traded. We've seen the down cycles back in December 2022. We've seen the up cycle, bull cycle, and The question is valid. The question is how do you see yourself moving forward? It's all about Bitcoin pricing, where the pricing is going to be. And if you're not a believer in Bitcoin, this is not your business. You should stay away from that, right? Hodling is not for you. If you really believe in the Bitcoin value as Bitcoin as an asset class, as a unit of measure and unit of store of value, then you need to consider that and hold that. I mean, if you look at statistics, and we have a lot of retail Bitcoin buyers other than institutional, there's a lot of study out there. Majority of the Bitcoin buyers, they're long-term hodlers. They don't sell. They keep accumulating, keep buying, keep accumulating, because it's if you look at the numbers, 21 million coins to be mined under the protocol. 20 million have already been mined. So the race is the last 1 million coin. And the question is, what happens after you run out of these coins? And the demand is still going up. Imagine supply every 4 years is going down with the halving. As a miner, we know that. Our production halves every 4 years. So the question arises, do you want to hodl or not? First question, do you believe in it or not? If you believe in it, you can be a Bitcoin miner, produce Bitcoin and hodl. You can achieve the same objective, or you can go out and buy in the open market. Now, candidly speaking, we did sell Bitcoin previously when the market conditions were as such to pay for our operating costs. But then there were years where we had a full hodl strategy where we hodled the whole Bitcoin and we did not sell. So from a long-term perspective, we are hodlers. We believe in holding Bitcoin because, as Andrew mentioned, the value for our stockholders is not just the Bitcoin mining, but the icing on the cake is the hodl. Because that Bitcoin per share, if you look at us as miners versus the rest of the mining industry, is 3 times higher than the highest Bitcoin hodler in this space. And our stockholders love that because having Bitcoin on the balance sheet will pay off the stockholders from a long-term perspective.
Amazing. Patrick, on this note, like it sounds like Terawulf has sort of an efficiency-first approach, where it's operating like an energy company rather than a Bitcoin company. As a public company who is involved in Bitcoin, and clearly, you guys are believers in Bitcoin, and right now you're playing the role of this efficient miner. Are you not tempted by the ability to do this infinite money print, kind of, have the raise debt and on convertible notes, and given your conviction in the asset class, is that not something that's tempting as a business to do?
Yeah, look, great question. Tempting, yes. Logical, no. So, and here's why. And again, I know this isn't going to be the most popular, I'm sure I'll be having cocktails alone in the corner, today. No one's going to want to talk to me. So, but look, again, and this is more of a traditional finance view, right? Even though I've been orange pilled, and that is you have a Bitcoin ETF, okay? So it's you don't have to go open up a wallet anymore and go through all that rigmarole. Like you can go in your Charles Schwab account or your E-Trade account or whatever account you want and buy Bitcoin by buying an ETF, and you're paying 5-10 bips, right, to the manager to do that, and it's safe, right? And it's so that to me was it was a game changer for the asset class, but it's also a game changer for retail and institutional investors. So again, my view is like, and I would tell an investor this, like if you want that exposure, then go buy the ETF because that's a super efficient way to do it. And you're not going to be diluted. You buy my stock because I can mine it at 40,000, sell it at wherever it is, and then reinvest that in growth. And that's how we grow. And I don't have to dilute. And so when I look at it, I just think like the business model that MicroStrategy is pursuing, it's a brilliant business model because they can finance themselves at virtually zero by issuing fiat and then buying Bitcoin. And as long as that doesn't come with a lot of shareholder dilution, I think that's a very viable business model. The problem that I see is like when you start mixing hodl with shareholder dilution, that's where, for me and for Terawulf, the analysis falls apart.
It sounds like, I agree that dilution would be terrible, but it sounds like there is an accretive ability for businesses, especially public businesses, to be able to run these strategies. Maybe, Andrew, could you share something about how the accretion works?
Yeah. So, one thing as I was thinking about, as you were saying, the sort of the correlation between dilution and accretion. Last quarter, we released a metric, a KPI called Bitcoin yield, BTC yield. And that effectively takes, period over period, the amount of Bitcoin over what we call assumed diluted share count, which takes into account all the outstanding equity plus convertible debt when it comes due. So it's, takes into account new convertible debt offerings. And this year alone, that metric for us is 17.7% yield. So to your point, you're right. The ETFs have been a significant catalyst in adoption for institutions and retail. And it's a safe adoption. And if you believe in Bitcoin, it's a safe way to benefit from it. From a corporate standpoint, what we've done is we've accelerated the value generation off of, above and beyond an ETF, where you will just earn off of the price appreciation of Bitcoin and maybe pay 5 to 10 to 20 basis points. We're actually generating on a dilution adjusted basis 17+% this year in Bitcoin yield. So that's how we represent to our shareholders how we're not diluting them. We're actually anti-dilutive by being able to put more Bitcoin on our balance sheet. Amazing. So I would ask, if you guys understand it, you guys, it's great. It would be great to standardize a way investors can understand that hodl strategy and how it's impacting shareholder value. So I think Bitcoin yield is something that we're really proud of having introduced this year.
It's all about how you define accretion and dilution. Because yes, the number of shares are being issued, so it's dilutive on the number of shares, but then you're adding an asset that is highly accretive, and that's entitled, all the shareholders are entitled to that. So when you look at it, as Andrew said, from a yield perspective, you're actually creating significant value for the stockholders. I also want to reflect really quickly, I know you're running out of time. If I have to reflect from other industries like oil and gas, technology, you've got very large players like Chevron, Exxon, Shell, Saudi Aramco, global companies, research-oriented, doing multiple different things, and truly being market leaders. And then you've got smaller operators who are focused on, let's say, Permian Basin and just drilling wells and from the shale oil wells and producing gas, natural gas and oil, and focused on operating costs on a day-to-day basis. So there's a difference. There's a space. Each space has a different player. And as you can see, all of us have a different flavor because of the nature of our businesses. The ultimate factor remains that how much value are we creating for our stockholders? And with the hodl strategy and mining combined together, we believe that creates the most value for our stockholders. And we expect to continue to create value in that direction.
Amazing. And I think that's a really interesting note because all of us here in the finance industry and the finance departments of digital asset businesses, we're thinking about how can we serve the users of our financial reporting. And with not just the technologies bringing these new challenges, especially with unique sort of financial engineering, it's important to be able to report in a way that's useful to the investor. And I'd like to maybe thank especially the folks at MicroStrategy who helped with the fair market value adoption and made that possible for and pushed for that. And it's so great that the FASB has adopted that and they listened and there's a process that works here. But it shows that this is an ongoing process. And Cryptio, we're also very dedicated to making sure that we can help evolve this financial reporting infrastructure and move forward with the industry to make sure that everyone who's involved knows what they're getting into. Thank you so much, everyone.
Thank you.